This episode is brought to you by Absolute Landscapes. Absolute Landscapes is a landscape maintenance company that focuses heavily on commercial property maintenance. Call today for information about the services we provide and how we can best help you. 803-427-5944.
It'll be like a live thing, so it should be live now. But yeah, man, I like seeing you talk and stuff and at CRG and stuff. I was kind of interested to hear what you had to say about some stuff. So I know that when it comes to like mortgages and things like that, sometimes that kind of scares a lot of people because I don't think enough people know enough about it. You know what I mean? And it just seems like it's one of those industries that like you have to be kind of careful. You have to know who you're working with and kind of be careful what direction you're headed. It seems like, because to me, it seems like there's so much to know. Like I don't know nearly as much as I should know. There was one point, like I had a real estate license for, I don't know, man, like a year, and I never did anything with it. You know what I mean? But they don't like it when you get a real estate license. You know, you almost learn nothing about mortgages. You know,
it's very true.
Yeah. And so you have to like refer out to a person, or you had to know, like, I think they say every realtor is supposed to have like 3 or 4 or 5, different mortgage people they work with. But that's like a whole different animal. You know what I mean? Yeah. It's like a whole different thing.
Yeah. I mean, I think it's almost like, I think it's a very strong adjective, but I mean, it's sort of an epidemic on how people don't know anything about mortgages coming out of college, with a college degree. I didn't know anything about mortgage graduating, and I had a business degree. I took finance classes, and, it's the same thing with people coming out of hospital. There's nobody teaches mortgage information out there, and it needs to be taught. And that's one of the things that I take value in is like sharing, information. Sometimes when I get on the phone with a customer, I'll talk to a customer for an hour just so they can explain sort of their options, because it is important. There's so much about mortgages that people just don't get, and they don't know because either they're being misled by somebody that's trying to be like, oh, well, we spend $1 million a week in marketing so that we can charge you higher fees and higher rates because you just don't know it. And that's why a lot of people do get targeted as first-time home buyers, because there's a lot of first-time home buyer programs out there, but they're not as many as people market to be, because they try to get those people into their atmosphere so that they can work with them. But it's about educating people, and it's about telling them like, hey, these are your options. You don't have to go with just a 30-year mortgage. If you're 50 years old, the conversation I have consistently is like, hey, you're 50. Are you going to start at 65 or 67? And most of the time they say yes. Like, well, do you want to have a 30-year mortgage when you're 70 years old, or what's your plan? That's a conversation we have to have a lot of times. But there's a lot of misinformation out there about mortgages. It's sort of sad, but it is becoming a bigger thing in our industry to educate people. I have a good friend that educates very big on the VA. He's a very, very big VA advocate for our veterans. He's up in a very heavy VA market up in Arlington. He advocates heavily for veterans, and those are some of the underserved areas. I mean, our veterans. People think, oh, well, VA offer is worse than a conventional offer, and technically, it's actually not. It's actually a better offer because they're going to get a better terms. The only reason they're using their VA is because they can get better rates, and if they have more than 10% disability, they don't have to pay the funding fee to VA, and they can do 100% financing. It's one of the great things that the VA has put in place for our veterans, over the years and stuff. So, yeah, it is definitely a lot of information that's not out there, and then a lot of that information that you do see out there is sometimes guided by marketing people to try to drive people in to them, which I get it. It's business. But it's really good to have that information. And it's also good to speak with a professional. I mean, like I talk to people all the time. They're like, well, I got told I could do a 30-year mortgage. I'm like, yeah, but like, is that what you want? Like, what's your goals? What's your plan? I have a friend of mine that we did a 15-year mortgage for at the beginning of the year. And he's like, dude, I want this house paid off in 10 years. I'm like, well, don't do a 10-year mortgage. Let's do a 15-year mortgage. You got 2 little kids, daycare, life expenses come up. Let's do this because you're in the financial industry too. And he's like, let's do a 15-year mortgage. He's like, okay, great. He got a sub 2% rate, beginning of 2022 on a 15-year mortgage, but he's going to pay it off in 10 years. And those are just different strategies. There's hundreds of different strategies, and we could sit here and talk for hours about all of them. But there's a lot of stuff people don't know. One of the biggest myths, and I think this is something we brought up off camera, was that a lot of people don't realize that you don't need 20% down to buy a house.
Yeah.
I mean, there's programs out there that do 3 and 5% are the most common ones, but you can do a 0% down. That's a VA loan, and then if you're in a rural area and your income qualifies, you can do a USDA loan. So there's a lot of different programs out there, and there's a lot of people that are 1099 employees, and they'll be like, man, I'm 1099, write everything off. There's programs for people like that out there where you just look at the 1099 and you use 90% of that income just off 1099. You don't even look at tax returns, and that's what you qualify them off. So there's a lot of different stuff out there. It's just a lot of people don't know it. Everybody's like, oh, well, I got a 30-year mortgage and I'm self-employed, so I can't qualify for a loan because I write everything off. So
the VA loan, that's like for veterans.
Yes.
Is there any other loan that is 100% financed, or that might be 100% financed?
Yes, it's called a USDA loan, and a lot of people misinterpret that because most people associate USDA with food and stuff like that. But the USDA does have a loan. I actually bought my first house with a USDA loan. It was a rural property, and it was in Waxhaw. So, I mean, it wasn't really that rural, but on the map, a USDA map, it was considered a rural property, and mine and my wife's income at the time met the guidelines. So it's for people. It's a good way for people that are not in suburbia and stuff like that live out in the country a little bit. And it's really, if you live outside the city, I think the map still goes down without looking at it recently. I think certain parts of Waxhaw and Indian Land and Fort Mill and stuff are considered rural areas per the USDA. It's just the income level. You have to qualify underneath the income level to sort of strive that home ownership for people outside of cities. So it is available out there.
So it does have to be under a certain income then? Because that's what's going to be my next question, is it had to be like under a certain thing?
Yeah. The biggest thing about USDA loans, to get into the nitty gritty of it, that is hard and a lot of people avoid them, is because as a lender, we can underwrite these loans in-house, fully underwrite them, ready to stamp the final approval on them, but then we have to send it to USDA. And USDA has to go through the full underwrite. So it can stretch out. It's really hard to meet a 30-day timeline if the USDA center that's close to you is running a 30-day turnaround time. It might turn that contract into a 45, 60-day contract just because of the USDA, depending on how slow they are. And then if they come back with one thing, hey, we need this one thing, you're back at the back of the line once you get it for them to review it again. So it is a slower process, but it's a good process. I mean, it serves the need that's out there, but a lot of people won't mess with them because of that, the way they have to be underwritten.
So you mentioned something about 1099s. This is something that I've always kind of thought about, that I don't really know how it works. Is it possible for an LLC? It's possible for an LLC to buy a house, like a business to buy a house, right? Or a property or whatever.
Yeah, you can put any property underneath an LLC. Most of the time right now, technically it has to be a commercial property, like an investment property or something, or bought with like a commercial style loan. Fannie Mae and Freddie Mac will not allow you to close a loan underneath the LLC because of the way the foreclosure process works. A lot of people buy investment properties and put them underneath LLCs. Technically, you're not supposed to do that because the note can be called due on you because you're changing technically like the ownership. I forgot the legal terms on it. But a business can buy properties, but usually you have to go down the commercial route with those for stuff like that. Unless you're trying to buy like rental properties, we have a special product that's underwritten like a commercial loan. That you can actually say, well, I'm going to close this my LLC, and I want to put everything underneath there. I don't even want to show up with my tax returns. And you fill out a certain tax form at at closing, and it doesn't even show up on your tax forms. The only thing we verify is that you pay, you have credit. That's it.
But if you establish an LLC specifically for like a rental property LLC or whatever, like that business isn't going to make any revenue. So I guess it just goes by you, the co-signer. It would go by your personal income or whatever, as far as the loan goes for the property?
Well, with the investment properties, we actually underwrite based on the income the rental property brings in. That's what we actually underwrite as. So on a rental property, it's called a debt service cover ratio. It's a commercial mortgage term. But what it is that the mortgage debt is covered by the rent. And that's what we want to see. So technically, that's how we prove that you have the ability to repay. On every loan out there, we have to approve the ability to repay is some of the stuff that came out with Frank Dodd. but it's really for investment properties. Now, if you were to say, hey, I want to buy this building for me to put my business in, that goes down a little bit more of the commercial route. And that's something that they would probably look at your business financials for to make sure you qualify for. But if you would like to buy you wouldn't be able to buy a primary residence under a commercial loan or underneath an LLC, to my knowledge. So, but it's mainly just investment properties and stuff. And it's just that rent, divided by how much, the mortgage payment is every month. And that's your debt to income ratio, technically.
Yeah. I just know, man, like real estate is one of those things. It seems like it takes so much money to get involved in it. You know what I mean? Like if you have, it just seems like you have to have so much startup money to get into rental properties or like a triplex or a duplex or whatever. You just have to have that money down. If it needs repairs, like I know repairs aren't financed, right? If you do like a house flip or something like that, they don't, like, I guess a bank, if it's a flip, I guess they only do a certain percentage of what the house is valued at. Cause I had a lady, mortgage lady, tell me one time that the repairs are not financed. Like the bank won't, I guess maybe they won't give you the cash to just make the repairs, if that makes sense.
Well, they do have a loan product called a fix and flip product, and it's sort of hard to break down like how it all works but you can finance the repairs. It goes into an escrow account. So if you want to flip properties, and all these people you see online flipping properties, and they base it off the ARV, which is the after repaired value.
Right.
And then you purchase it, and then the extra money goes into an escrow account. So you get disbursements like a construction loan as you continue to do stuff on the house. Now, there's a lot of caveats to that. I mean, an average Joe couldn't get a fix and flip loan and go do the repairs themselves. They have to have like a general contractor most of the time. They have to have these bids and stuff like that. So there are programs out there. One of the biggest things I think is out there, and it's really important for people to know, is what they call one of the house hacking things that you can do. So if you're a first-time home buyer, you can go buy a 2 to 4 unit property with an FHA loan with 3.5% down. And the reason I say it has to be a first-time home buyer is because there's no way you'd ever convince anybody that an underwriter that if you own another home that you're going to move into, a 2 to 4 unit property to do an FHA loan. I mean, it's like you never have that as a second home, per the guidelines, it's considered an investment property. So I tell people all the time, especially people that work for me are young, like just get a business, don't own a house. Like, look, buy your first house as a 2 to 4 unit with an FHA loan. And all you're required to do is live in that property for 12 months as your primary residence. That's the guideline. And then
you like legitimately had to live there. Like you have to actually live there.
Yeah. It has to be one of the units has to be used, but people are like, well, I can't afford a $500,000 house. Well, you can use the other 3 units if they're rented out income because it's income coming in. So technically your mortgage payment is probably going to be paid, from day one by the other 2 or 3 units that are there. And then after a year, you can move out, go buy another house and rent that unit out. Now you own a 4-plex, which they're hard to find in a lot of areas because they're so highly desired by the local mom and pops kind of investors. And then one thing else you could do, and I actually know quite a few people that do this, they'll buy a new house every year. Now, if you're married, I don't know if your wife would definitely have to be in with you on this, but you go buy a house 5% down, go in there and fix it up over the year. After 12 months, go buy another house 5% down. Fix it up, build it up. After 12 months, 5% down on next house. So you're buying properties every 3 to 5, 6 years, so on as a primary residence. You just have to live there for a year. That's the standard that they have out there, is that you have to sign a 12-month letter at closing on most mortgage companies. And it says that you will live in that property as a primary residence for a year. So you have to legitimately live there for a year, but it's a way to build up your portfolio. But I mean, if you got a family, that's going to be hard convincing your wife and kids that you need to live there. But if you're a young guy and you want to grit it out and do it, then it's definitely a great way to build up portfolios. Another way to build up portfolios that a lot of people don't think about is to bring in partners. So if you got a buddy like, hey man, I only got X number of dollars, but my other buddy has X number of dollars, like let's go in and buy this mortgage, this property together. And that's where the investor cash flow loan, which is made just for investment properties, put it underneath the LLC. That way you both have it. It's not shown on both your credit reports. Y'all both are 50-50 owners in the LLC. And now you own a rental property together because y'all brought y'all's money together for the down payment, which is typically 20%, sometimes 25% down, depending on credit scores. But there's a lot of ways to definitely do that. It's just a matter of like knowing, and that's where it falls back on. Like, there's not an education out there about how to buy houses, how to buy rental properties, and one of the biggest things out there is a lot like right now. A lot of people are like, man, I think I don't want to buy a house because rates are too high. Well, rates are actually not bad right now. I mean, 6.5 for primary residence is pretty good, with an APR of like 6.6 or something to that extent. I have to state APR for legal reasons. So, but I mean, you buy a house right now in this market, you can still negotiate, seller paid, concessions, 2-1 buy downs, 3-1 buy downs. There's a lot of different strategies. And as soon as the rates dip back down to like 5s or even in the 4s, which they will next year or within the next 12 to 24 months, the values are just going to skyrocket again. And it's going to turn a seller's market right now. So the people who are selling houses right now, there's a reason why they want to sell their house. Either tax reasons, they need the cash, they're moving, job, whatever, there could be divorces. There's a reason they're selling their house right now in this market. And it's a great time to buy. But there's just a lot of different strategies out there that you can use to buy properties right now in any types of properties.
So before we move on from this, I wanted to ask about this. You said the 3.5%. The closing costs and all that kind of stuff, do you have to pay for that, or can that be included in the loan, or like is that added on to the money that you put down? I mean, if you were going to buy a house, I guess maybe how would you plan for that? Should you plan on covering those closing costs and stuff like that out of pocket, basically?
I would say always plan on it, because the 3.5% is just the down payment.
Right.
Typical closing cost, because everybody's closing costs can be different, depending on the attorneys you use, lender you use, and stuff like that, escrows, taxes, all that. You should probably budget 2 to 3% on top of that as what it's going to cost you to close for appraisals and stuff like that. And you do have to pay for that at closing. Now, you can look at, that's where, being in a buyer's market is better than being in a seller's market, because now you can ask for that seller, hey, I want, $5,000 towards my closing cost. And they're more likely to give it to you instead of going down on the price, because they'll net what they want.
So does that mean that they ask for that much more off the price and they take that excess money and just pay the closing cost? Is that what that means?
Well, the way it would work, you can do it two different ways. So say you bought a house for $400,000. So let's look for $400,000. You're like, man, I only have enough for my down payment. Go in there and ask for an offer $405. And then say I want $405, I want $5,000 seller credit. So what we'll do, the seller will be like, okay, well, I'm still going to net what I want to net. I'm pretty much giving you $5,000 credit at closing to cover these costs. So when the attorney buys up all the money, that check goes to pay for those costs at closing. Or you'd be like, well, I want $400,000 with this $5,000 seller credit. And at the end of the day, it gets credited to you on the final closing disclosure of what that is. And it's just it's technically a way to finance it sort of into the purchase price, because you're just paying a little bit more for the house, but you're getting a credit for doing it. So a lot of people do that strategy. I've personally used that strategy a couple of times just to keep my cash flow different. I've seen people that had 20, 30% down use that strategy, because they're like, I want a free loan technically. So if I need to refinance in a year from now, I really didn't pay for those closing costs, even though I paid a little bit more for the house. So
yeah. You mentioned something else too that I wanted to touch on, the market right now. Are you guys seeing like a lot of people building new homes? Cause like I know like material and lumber and all that kind of stuff went way up. There's a house right down the street from me that got built not too long ago, like within the last year. And they built this thing with like metal studs. Dude, I thought it was going to be a shed. Like I thought it was like a shed somebody was building. And there was like metal studs. And I went by a couple weeks later and it was like a house out there. I was like, they built that house with metal. I guess it was cheaper than, I don't know. I guess it was cheaper than lumber.
Yeah, I know what you're talking about. I think they call them barnadiums or something like that. They're made. I know what you're talking exactly about. My little brother's best friend actually built one out on their family farms. It's different build, but to answer your question, man, I mean, the builders after 2007, 2008 realized like you can't go too heavy in inventory. You just can't, because if you did, then it's just going to 2007, 2008 would have happened all over again. You'd have builders going bankrupt and stuff like that. So even with the builders right now, I mean, inventory is still low. They're very smart about what they're doing. They're not building hardly any spec houses anymore. Every house that goes up is usually under contract by the time they start building it. So there's not a bunch of spec houses like they were back in 08, 09. So there are a lot of delays in houses, but these builders have what they've learned over this last couple of years during COVID is that they need to stock up as much as possible. That's reasonable for all their projects that they project to happen over the next 12 months. So I know that a lot of builders have actually bought warehouse space or rented out warehouse space just so they can store stuff for projects they expect to have going down the road. Now, if you're building a custom house where they have to custom order a bunch of stuff, I mean, you're probably looking at, you're definitely going to be over a year building a house because all the customization stuff that you get. But for your standard, D.R. Horton, Lennar home, whatever, Schumacher home, or whatever you see out there. Most of those builders right now, it is slower of a process, but they don't put up a house unless they have it under contract and designed out already. So they're smart about that.
But like what I'm saying is that how much the price has went up on homes because of like I guess COVID or whatever. But like I've heard builders say that people are still, if it costs $30,000 more, people are still wanting to build. It's almost like it hasn't affected anything other than the price going up.
Yeah, we see a lot of new builds going up because of the whole reasons that, a lot of the houses on the market, there are not a lot of inventory. So if you can't find a house that you want, you might as well go build it, Mm-hmm. It's really what it comes down to, because some people are like, well, if I'm going to pay $500,000 for this house that's 20 years old or 30 years old, I can pay $550,000. The house might be a little smaller, but it's brand new.
Right.
And a lot of people are like, home maintenance, like you mentioned earlier, man, that's a scary topic for a lot of people because you can have discussions about blue collar workers and generations and stuff like that. That's a totally different topic. But, there's a lot of people that don't know how to fix basic stuff anymore, plumbing, stuff like that. And when you start talking about home repairs, people get scared real quick. Like, I put all my money down in this house. My AC might go out next year. What am I going to do if I have to pay $15,000 for a new AC unit, and that scares people. That scares people out of home ownership because of just the upkeep of a home, and that's why people, stick with renting. They don't want to have to worry about the upkeep of a home.
Oh yeah, definitely. I've heard, like, I think it was Gary Vee said he was renting in his 30s. You know what I mean? And he was just, but there's certain benefits to renting that you wouldn't have if you owned a home. Yeah, if you own it, it's yours and all that kind of stuff. But like you said, man, that maintenance, like keeping up on the house, the taxes, whatever. I had a client a couple months ago was telling me about, they built this home. I think it was like $400,000 home. And it was a custom built project, but the contractor they hired, dude, this guy, they messed this house up. Like, it was supposed to be, I don't even know how to describe this thing. It was like a cabin almost, but it had a really certain weird look to it. Anyways, that guy, like, they had to bring in a new contractor, an engineer had to come in, and they thought the house was going to, it was like and I've never really heard a horror story like to that extent. You know what I mean? I guess they were working off of a draw, like the construction loan, and that froze up. They couldn't get any more money. And it was crazy. I'm like, you pay that much for a house, and it's like they probably paid, I don't know, 50, 100 grand more than they probably should have just to fix the thing, to get it to where it wasn't going to fall in.
Yeah.
But it's just like those kind of, I don't know, man. That would scare me about buying a home or, building a home from the ground up. I'd make sure I'd had a contractor who knew what he was doing, but it sounded like this guy didn't.
Yeah, I think it's like every business, man. You got the good and the bad people. I actually know one of my fraternity brothers' parents built a house down Lake Wylie, and they ran into the exact same situation. It took the house to get built like 2 years, ended up getting in a court. It was just a bad situation, but that's why you really have to check out, who you're working with. And, that goes for every industry, but especially with builders, if you're building a house right now, is really check them out, and check out their reputation around the area. And I think, that's one of the concerns I would have too, building a house. But I know during the loan process, if you do a construction or perm process, before every draw done, there has to be inspections done.
Oh yeah.
And there's only so much the city can really do, home inspections other than just like the basic stuff with that. So you can't really blame the city. It's just one of those things where, like, in every industry, you got the good, the bad, and the great, what they do. So,
well, I think a lot of people think, like, when they think construction, they just think like, oh, construction, but like, people don't understand how hard carpentry really is. I mean, to cut everything to where it's supposed to fit and to be like an exact fit, like, that's a hard job. It's not only physically hard, man. It's hard to be a good carpenter is a hard thing.
oh
Like,
yeah,
you have to really know what you're doing. It's not just like, just some construction job. Like, you have to know what you're doing, man. You can't just send anybody out there,
I mean, I'd borderline say it's almost an art. I mean,
definitely.
I've seen people that have done good carpentry work. And you're like, oh, that looks easy. Let me try this. And next thing you know, you're like, wow, like, this is way harder.
Yeah.
It's an art, man. To have a real good carpenter, and to build a house, a solid, good house. I mean, it's an art form, in my opinion, because going through my master's degrees and stuff like that, there's so many different ways that you can do so much different stuff and cut corners and stuff like that. It's an art form to put a really good house together that's going to be there for 30, 40, 50 years, And when I was in college, I surveyed for a little bit, and up in the mountains, they have to make sure you have to go there and survey and hit the corners of the house as they're building it up, just to make sure it didn't shift. Or make sure it's still square, and just having a house that's square, when I laid floors down, people were like, man, my father-in-law was like, your house is like perfectly square. I'm like, yeah, I'm actually really impressed.
Yeah. Yeah. Cause like you said, if it's a hard job, then think about how easy it's going to be to cut that corner,
Oh, yeah.
to skip on what needs to be done. And that's what I'm saying, man. You just have to know who you're hiring. Because, which I guess all trades are kind of like that, to be honest. Like, all trades are really an art, but especially carpentry, man. It's that you like some of the things that people can do on these houses, even these stick built homes, like, even if they're like what do you call it when it's like you have like 5 blueprints that you pick from, and they're kind of like, you see them in like subdivisions and stuff. Yeah, but I thought there was another name for it. It's like you go to a builder and they have like model A, model B, model C, and it's like they just kind of vary in a neighborhood type thing. Well, anyways, it seems like those are kind of repetitive. Like, if because I had a guy that worked with me a couple years ago, and he used to do plumbing in those houses. And he was saying that, like, if you have this model house, it's a little bit different than this model, but it's kind of the same. And it's a little bit different than this one. And it's almost like, I don't want to say repetitive, but it is kind of repetitive, because a lot of it is close enough to the same that it can be, similar. But I don't know. I guess they have like some of these subdivisions, they have, 5, 6, 10 different models that they choose from. I guess the builder has different models. Like, I'm sure the subdivision has something to do with that as far as square footage and stuff like that goes. But what do you think, as far as like mortgage goes and what you do? Like, what do you think what would you say is probably the hardest part of it? Like, what would be the most challenging part?
Oh, that's an interesting question. I mean, the most challenging part is, I would say, you've got so many people that came into our industry because you can make money, and emphasizing to people that, I'm not here to make a dollar off of you. I'm here to help you. I'm here to, customize your financial needs based on what you're telling me those needs are, and working with you to put something together that is going to benefit you, today, tomorrow, 5 years from now, your long-term goal and stuff like that. But unfortunately, you got a lot of people out there that are like, oh, well, here's a 30-year mortgage, and, this is the rate. And they don't really customize the loans for them. So I actually have, it's not a funny story, but it's actually a really sad story. I have a customer of mine I've done a lot of loans for. Well, 6 months ago, she's like, Chuck, I want to buy another property. I'm like, you can't. You got to wait until you do your tax returns next year, because you wrote off so much last year on all the other properties. Well, she didn't like my answer. I got a phone call last Saturday with her crying, and she like 8 o'clock or 9 o'clock in the morning, and she's in Arizona. And she's like, Chuck, I don't know what I'm going to do. I'm like, what do you mean? She's like, I got $20,000 on the line, and they can't approve my loan. I'm like, well, who did you talk to? I was like, we talked about this. Like, you don't qualify for a loan right now. And it's a sad situation, but she called, one of these people that you see on TV. I'm not going to name names, but, there are a few football stadiums and stuff like that. She's like, oh, they told me I could do it. And I was like, no. Like, I was like, send me the appraisal. Let me just take a look. And it's a rental property, so they didn't even order a rent schedule for the property, which is a standard procedure to order what the market rents are. And I'm like, the market rents for what you're going to get, you can't do any program because you won't cash flow right now. Like the market rents aren't called up to where you need to be at unless you put X number of dollars down, which you can't do because you don't have assets. And so she's out. She lost $20,000 this week because of that. And because she talked to somebody that just wanted to throw a deal in to say they threw a deal in, and trying to really differentiate themselves, because a lot of people think let me rephrase this. The most difficult part of my job is everybody thinks they know everything about mortgages when they really don't. And a lot of people will be like, oh man, it's as simple as me just giving you my pay stubs and my W-2s and y'all can approve me for my $500,000 loan. And yes and no, but it's really not that simple. I mean, it's really about customizing the loan. There's a lot that goes into the backing of a mortgage to make sure people will qualify, make sure it's a good loan for them. And, having options, not just forcing like, hey, this is the project you need to take and force it down their throat. Say, no, this is the options. These are options that you need to do. These are the pros and cons of each one. These fit these goals here, but if you're trying to do this 15 years, it's not going to fit that goal. But nobody stays in their mortgage for 15 years anyways. It's very rare that anybody stays in a mortgage past 7 years. But it's really just making sure that, you communicate efficiently and effectively to everybody. Like, this is what needs to be done to make sure that you get in the right financial situation. Because reflecting back to 2007, 2008, because I got in the business in 2007, there was a lot of people that I talked to over those years, up until probably 2012, 2013. Like, yeah, I got this mortgage, but I never really qualified for it. Or I got this mortgage and nobody ever explained to me that what an adjustable rate mortgage does, or how it adjusts and stuff like that. They didn't evaluate the risk. They just wanted to get a deal done, and that was it. They never wanted anything else. And it was a turn and burn situation. And that's what I think is probably one of the hardest things in the industry, is really just communicating to consumers that it's not about working with a brand name in the mortgage business. And not every lender is created the same by any means. And, with what we do here in my company, that I work for, we believe in make sure there's 5-star customer experience, because we understand the lifetime value of a customer. And that's something that a lot of people in business don't understand, is that lifetime value of the customer. But a lot of people learn it in business schools and like master's level schools, or if you get coaching and mentoring, a lot of times for entrepreneurships, they'll talk about it. But it's not something that a lot of people think about. What's the lifetime value of a customer? And if you turn and burn, it's not good for a customer transaction, number one. But having that 5-star experience, taking care of them, they're going to tell your friends and family, because there's going to be a story about what happened, with the interaction, no matter if it's good, positive, and negative. When we get off here, there's going to be a story about, what you say about how this went. Same thing. I'm going to say how this went after. There's going to be a story that goes along with every interaction. I think we actually had a pretty deep conversation about this, a few months back at CRG, but, you make an impact on everybody. There's always a story there. And just going down that route with people, man, it's one of the things that people are like, oh, well, people are like, well, I bank with the bank, so I'm just going to go down to the bank down the road and get my mortgage. Well, they might, and then they turn down, and then next thing you know, like, oh, well, you should have been turned down. They just didn't have a product that you fit into, or they didn't have an FHA loan, or they didn't have this, and stuff like that. So that's a very broad, rambling answer to you.
No, yeah, that's good. Yeah, it seems like, there's way too many people focused on just like the business side of it. There's too many people focused on just making the money, just making the profit.
Yeah.
And I've always said that if you focus on solving a problem for somebody versus just making the money, you'll get a lot farther, with the relationship or whatever. Because I guess maybe that's one thing that sets apart the people who are the most successful in their industry, is they're not just trying to nickel and dime everybody. I said this a while back, talking to a couple guys on here. One thing that will turn me off from a sale quicker than anything is somebody who is just like trying to force it down your throat. You know what I mean? If I'm there and I'm trying to solve a problem or whatever, trying to buy something, and the person either can't take no for an answer, or if I feel like there's no value in the interaction, that just turns you off to the whole thing, But I think there's also too a certain sense of integrity that goes along with that. Like if you're trying to help somebody to the best of your knowledge, unfortunately, I guess maybe not everybody sees it that way. They're just trying to make a commission or a quick dollar or whatever it is, but I think that's a good way. I think that is a good way to set yourself apart, to be, to create the value that you provide in your industry. I think that's a good way to do it.
Yeah. I think that's like, to our beginning of our conversation too. I mean, it's through education for more, finances. I mean, that's one of the things that we think is the most important is we can provide value to you, even if you do business with us not, it's through education. Know what you need to know so that you can make the best decision for you, your family, whatever. Because at the end of the day, you're writing the check or online bill pay or whatever you do to pay your mortgage, whatever is the best choice for you. And having the correct knowledge so that you make those right informations is very critical. And, I got to say, there's a lot of people in the mortgage business right now that are coming out, and that's what they're doing is pushing out tons of education. And it's great. I'm trying to contribute to that movement too, but it's just about education. Educate so you know what you're getting into. Don't just call up a mortgage company and take what they give you. Call a couple of them, see what they're asking you. Are they talking about your goals? Are they asking about your long-term plans? If you're a young single guy, hey, you got a serious girlfriend, y'all plan on getting married. What's your strategic financial goals? If they're not asking those questions, then they're just saying, hey, so purchase price is 500. You want to put 20% down? Okay, I'll give you a rate of 5%. They're not really. They're just trying to be very transactional, and that's one of the things that we coach our guys too. Is like dig in and help people, even if you can't help them. Tell them, hey, this is what you need to do. I have probably 10 customers right now, if not more, that have came to me to get pre-approved. Like, can't get pre-approved, but here's a plan. This is what you need to do to get your credit. This is what you need to do to save up money. This is what you need to do, and you can buy a house next year or 6 months or 12 months. And 80% of those people will do what I tell them to do. And, when they get to closing, I've had quite a few call me crying, happy. Like, nobody else would spend this time with me. Nobody would tell me what I needed to do. Everybody just told me to call them back once my credit score went up, or it's saved. And that's critical because the other 20%, I might have lost contact with them or whatever. They might not have done the plan or whatever. It's just educate, and people. And that way you're not being sold. You're getting a good deal. You're working with a true professional, everything, I mean, it comes in every industry too. Like I really would like people to, mow my yard, but I've had people like, hey, I need somebody to mow my yard because we moved, blah, blah. And then my neighbor's like, dude, this guy doesn't even know how to use a mower. What are you talking about? This guy was referred to me. They're like, no, dude, like this guy's like, you don't want to work with him anymore. So I mean, it's definitely one of those things, man. I mean, it's just education. And
it really amazes me that we're not taught finances more than we are, like in high school and stuff, like just the basic like we're taught almost nothing about finance, financial management, taxes, like that stuff just isn't taught. And it blows my mind that we don't know more than we know about that.
Yeah.
I mean, I'm not talking about like mortgages. I'm talking about just basic finance, just the basic stuff,
Yeah.
Because most people, if they don't go to college or if they don't have parents or a family that can educate them, or if they don't know people like you, or if they don't search it on their own, like they never hear that kind of stuff. They never find that stuff out. And, I don't know. It just seems like high school would be the place to kind of maybe touch on some of that. Because back when I was in high school, man, we didn't even do home ec. Like they took home ec before I got out of high school. As far like cooking and stuff, we never learned any of that. I have 2 sisters that are older than me, and they gave them like this little baby doll type thing or whatever to carry around for a couple weeks. We didn't get that. We didn't do none of that stuff. I don't know. I could ramble on about the education system. It's probably not a wise thing to do, pun intended. But like, I'm just saying, I don't know, man. The education system, it amazes me that we're not taught those basic things, like especially taxes. Like how are we not taught taxes in the fundamental education that we get, as teenagers or whatever. So I don't know. But yeah, I was just asking what you thought the most difficult thing was, because I'm just interested to see like how people meet obstacles and how they kind of overcome them. I think that's a big thing to make us who we are. I would argue, I would probably state that maybe some of the most difficult things I've ever been through has been some of the most valuable.
Oh,
you know?
yeah, definitely.
And maybe it's hard to see that at the time, but like looking back on it, like the lessons that you learn and what you're able to take from those situations and who you're able to become once you get out of that, on the other side of it, it's hard to put a value on that. And it's just, I think a lot of people, sometimes they get caught in the moment and it's like, it's never going to end or whatever. But those can be some really life defining moments, if you're just able to have, like we talked about earlier, just have that mindset, just have the mindset of being able to handle it and just know that your future self is going to be proud of you for what you're trying to do.
Oh, 100%.
That's another thing too these days. There's just a lot of immediate gratification going on, It seems like it's
yeah.
I mean, even I have a problem with it, man. It's just hard to like not take that immediate reward or whatever, and think long term sometimes. But I think it's like a skill. I think it's a skill to have to like be able to. Well, it's discipline, is what it is. It's in the end of the day, that's what it comes down to, is discipline. Like we talked about before we got started rolling here. We talked about Ed Milet. Dude, I love that guy's messages, man. He's been on. Who is that guy? Who's the guy that has? The name of the show is Impact Theory. I
know who you're talking about. He's the guy that started Quest Bars company.
Yeah, he's got that nutrition thing. I forgot his name, man.
It starts with a B. It's like BIYEO or something like that.
I don't know. I need to look that name up so I know so people know who we're talking about.
Yeah, I know who you're talking about.
But yeah, he's got good stuff too. But that's the first time I saw him was on that guy's show. Tom Bilyeu, I think is how it's pronounced.
Yeah, that's what it is.
Yeah. So, okay. So going back to real estate for a minute, because this is something I've always kind of questioned. Like, let's say that if I want to start a real estate portfolio, so, I have a business or whatever, you can't, if I go to like try to get a loan, it's going to look at my personal income, right? Like my W-2 or whatever it is. If I have to go if I say, hey, I want to start a real estate portfolio, to get a couple rental properties or whatever, I guess maybe the first couple of years it would be like me doing it instead of an LLC. Cause this is what I was saying earlier. Like if you establish an LLC, like, Cody's Real Estate LLC, and I go try to get a loan with that, well, that's a brand new LLC that doesn't have any revenue documented at all, at all, like ever. And so I guess that just falls back on my W-2 personal income. Like how would that work if you're trying to start a, I guess, real estate investment business? Like where would the funds, I guess, maybe come from?
Well, the first thing I would say, depending on the loan program, it would depend on if it go off your personal income or if it go off the rental property's income. Because if you do like a standard conventional Fannie Mae, Freddie Mac loan, then yes, it's going to look at your income. And
you can use those loans for a commercial purpose, like for rental properties, investments.
Yeah. As long as it's a residential property, you can use those loans too. But if you're like, well, I'm self-employed, I don't show any income, but I want to put this house into an LLC, then you have to go with what they call the debt service cover ratio loan, which is what we tagged as the investor cash flow loan. And that's underwritten just like a commercial loan is. So if you were to buy an apartment complex, we care about what rents are coming in and are those market rents or above market rents versus what your payment is. Because Fannie Mae and Freddie Mac, they don't want you to put those loans in LLCs. They want to make sure that if it comes down, that they can come get that property through foreclosure and obviously come to you with it. They're actually diverging away from non-owner occupied because they want to focus so much on home ownership to people that need home ownership. So they actually are making it priced out so that probably 5 years from now, they'd probably be totally out of that spectrum, unless it's like a cookie cutter investment property loan. And we'll see more private money in there, which is where you come with the investor cash flow program. So if you were to call me today and say, hey, Chuck, I'm buying an investment property, I want to put it in an LLC, like, all right, this is the only way you can do it. You got to do the investor cash flow. And that LLC, we don't care about what that LLC is making money because we're looking at that property. We only care about that property. Is your credit good enough? Do you pay your bills? Do you have the down payment? And then does the property cash flow? Those are the three things that we look for on those properties. And that's the best way to start an investment property portfolio, other than the house hacking stuff that we talked about before. But honestly, that's going to take some patience with that. The biggest thing is right now, it's rents are always going to go up. And one thing about portfolios, and I think this is something really important to talk about, is that you hear about all these people I'm a millionaire. I made my millions in real estate. Well, they made their millions in real estate because their net worth is now a millionaire because of the equity in the properties, and somebody else was paying down that debt at the same time, and the equity grew. And next thing you know, they got 10 houses, all have, we'll just say for easy numbers, $100,000 in equity, and they have no debt. Now they're a millionaire in equity in the properties. And that's one of the biggest things. More people, that's why they always talk about how more people become rich off real estate, is because, somebody's paying down that mortgage, and real estate prices are always going to go up. Unless you just buy a really bad area, you might have to wait 30 years. But, if you buy in a decent area, that's where it is. You just got to watch for the trends, and stuff like that. We can talk, trends is a whole different conversation. But the first to hit your question on the head is you got to get the money down payment, the credit. And then if you want to put it in an LLC, you don't always have to put those programs in the LLC, but you qualify with the rent of that property versus what the actual mortgage payment with taxes and insurance is. And if you want to put that into an LLC, you can close that loan in an LLC. We just verify that, hey, are you a credit-worthy person? And do you have a down payment? And does the property cash flow? Those are the key things that we look for in those types of properties.
Yeah, that makes sense, man. I feel like an attorney and an accountant would both probably tell you to do an LLC for it.
Yeah.
But I mean, I don't know. I'm not an attorney or an accountant, but I just feel like that's probably what they would say, And I was just curious because I know, when I started, if you start a business, a landscaping or whatever it is, whatever kind of business, a restaurant, if you go to a bank and say, hey, I need to get money for equipment for my business, well, the first thing they're going to do is look at, well, how long has the business been established?
Yeah.
Because they always ask 2 years tax returns, always. And then it's how much money have you made over these 2 years? Did it cash flow? All that kind of stuff. So that's why I was asking that about the LLC, because if you start out fresh, anything fresh, it's there's no money there. But I guess with real estate, it's a little bit different because you can see what the property is actually going to bring, versus a business. There's really nowhere to guarantee what you're going to make.
Yeah.
So I guess that's a little bit different.
Well, there was one thing too. I mean, I understand a lot of people talk about LLC for liability purposes. I mean, obviously, but there is another thing too that, a lot of people don't think about. And, one of my rental properties, I don't have an LLC, but I have an umbrella policy to cover me for a few $1 million. And it only costs me a couple $100 a year. So that's also another angle to go at too. I mean, that's obviously a conversation you need to have with your attorney based on your assets and stuff like that. But, there are umbrella policies out there that are really, really cheap, so that if somebody goes and breaks their leg on that property or gets injured on that property, my homeowner's insurance is going to cover so much, but then my umbrella policy will cover the rest. And that really is, opens you up from liability too, because all in all, there's really not much going to happen on a property that you'd probably be sued for over $1 million for. Unless you intently burn down the house and murder some people, which I hope nobody would do. There's some psychopaths out there, but all in all, if that's what you did, you probably need to worry about jail time and not you're being sued. So that's a good angle too for that, and I recommend that a lot of times for people, especially if they're doing the house hacking, where they're buying a house, living it for a year, moving, buying another house, living it to a year, and then moving. Is instead of going back and putting those houses in LLCs and take a chance of Fannie Mae or Freddie Mac or the servicer calling those notes due on you, just get an umbrella policy to cover your net worth in case something does happen and somebody tries to sue you. And that's really been, I got recommended that a long time ago, and that's what I've personally done, other than one property where I've done an LLC with it. And that was just because my partners and stuff closed in it that way. So
I know I know you're just using general numbers earlier, but you mentioned something about a $400,000 house. Is it common that people buy a house like that to rent out? Like that just seems like to me, that just seems like an expensive rental property. I would think rental property is a little cheaper than that.
I use that, but it really just depends on the area. A lot of people do think of rental properties, like 200 or less. But as values have appreciated, I mean, we have a few investors that we do a lot of business with that they won't buy anything under 400. Or if it's like a beach house, like, okay, well, I'm gonna buy a beach house on the Outer Banks or down the coast, I mean, you're not looking at $400,000 rentals then, because so many people are trying to get in the Airbnb game, that, they're like, well, I need a beach house for a resort area. And you're not going to find a decent resort area house probably for sub 350. That's going to bring in the kind of money you want on a Airbnb anyway. So I use that number just as a whole because it's sort of average purchase price around town for the most part. But yeah, I mean, everybody's just depends on what you're trying to do with it. I mean, I've seen people that have literally bought beach houses and cashed out, retirement plans to buy a beach house because the cash flow on it was so good.
Yeah.
So
I remember this from real estate. There's like a general equation or like a very rough estimate of based on like the house of the value based on what that would bring rental wise, like if you rent it out. And I can't remember what that is. Do you know what that is? Like if it's like just for easy math, like if it's $100,000 house, is it like there's a certain percentage that it might be like rental income per month? I forgot what but I think I learned that when I was in real estate, getting my real estate license.
Yeah, some people use the 1% rule. I think that's what you're talking about. Is whatever 1% of the purchase price should be what you get the rent for. But I think that's sort of it depends on the area. Like there was an old rule of thumb, like, hey, you shouldn't refinance unless you drop 1%. You should never refinance. But that's a very generic rule, and that was a rule when most people's houses were sub 200,000. Because under 200,000, you probably shouldn't refinance unless you can drop your rate at least 1%. Now, I think it's a rule, but it just really depends. I mean, the biggest thing is just so many markets are so different. I mean, it's really hard, to say what you can get for rent in different areas. I mean, it's even with Zillow and Z Estimate. You got AirDNA. There's a lot of other sites that provide estimated rents. It's really going to be what people want to pay in that area. I mean, it's hard to say based on that. I mean, people have used that rule of thumb. I think it's a good rule of thumb for starter investors. Like, but the biggest thing is probably cash flow. And that's the one thing I tell people all the time. Like, yeah, you can buy 100 rental properties, but if they don't cash flow, you're an idiot. I mean, and people don't think that. They're like, oh, well, I'm automatically going to make $400, $500 a month because I've got an investment property. I'm like, no, it doesn't work that way. It can work that way. But most likely, you got to wait and like increase rent, and have that good 30-year mortgage or whatever it is that you want to pay it off on as you go. And then you're going to get to a $300,000-$500,000, profit down the road. But most likely, unless you just get one heck of an off-market deal, you're not going to find those deals where you do that. And that's where all these people online. I mean, I love some of Grant Cardone's content, but he's like one of the worst people. Like, I won't ever buy a house. And then he buys a house in Malibu. I don't know how much he spent on it. Buying stupid, but he buys a house in Malibu. And it's just one of those things where, like, it's just, the property's got a cash flow. And that's really, like, you can use a lot of rules of thumbs and stuff, but have a good, if you look at rental properties, don't go by word of mouth. Find a good agent that knows the area, that knows what properties are actually renting for. And that's where you should use your numbers for. Now you can like, okay, I know in, York County, I could rent for X number of dollars for this property. But if I go down to Lancaster to a certain area, like I'm only able to get this much rent versus, if I go to Waxhaw, Ballantyne, same house in Waxhaw, if you go over to Ballantyne, I mean, you're going to get more rent, it's just proximity, location and stuff like that. And we have the city that we have to think about too. I mean, the further away you get from the city, the cheaper the rent's always going to be, as those density of people. That's why they say people will move, pay to move out because they have to keep moving until they actually can afford to move, where they live.
Right.
So it's just the area. I mean, I like the rule of thumb, but I think it's one of those things. It's rule of thumb, so you're going to be taking so much content behind it.
I think most real estate agents, they use what's called a CMA, comparative market analysis.
Yeah.
And but I think that's for like pricing the house, like what the house, if you're trying to sell the house, I think that's what that's for. Yeah, I mean, 1%, man, if you can rent a $400,000 house for $400, that seems kind of like a pretty good deal, to be honest. So I kind of see that. What do you think about? And I'm asking because people have mixed feelings about this thing, like the contract assignment, because a lot of people say this is like an unethical thing as far as if you're, you hear these. I don't know what you call them, these real estate investors, quote unquote, and they're offering these classes. And the first thing they always teach people is the contract assigning. So I know that what that is, but just for anybody who doesn't, like if I say that I'm going to buy a house, for $100,000 and it's a good deal, but then I sell that contract I assign that contract to somebody else for 105, then I just made $5,000 off of selling a piece of paper that somebody else is now going to buy the house. I can see how and where that would get kind of like that could get unethical if it's not done the right way. But at the same time, man, it's like that's like a perfectly legal thing to do. I guess it just depends on how you go about that. Because I've heard, like, when people talk about real estate investing, like I said, that's the first thing they talk about is assigning contracts. Oh, I made, 5-10 grand overnight, in just a couple of weeks. Now, the downside of that is if you can't find somebody to buy that house, you have to buy that house. If you can't sign that contract, you have to buy it.
Yeah.
But I don't know. I'm just curious to see what people think about that. Cause I don't know, man, to me, like I said, it just depends to me how it's carried out. Like if you're manipulating the person and you're not, obviously that's not a good thing to do, but it just seems like that's one of those things that's too good to be true almost. And also too, you have to be at the right place at the right time. You have to be able to get a good deal on it. I don't know. There's a lot of moving parts right there.
There is, man. And I've heard about that a lot. I actually heard recently that there's some laws and legislation that came down on that. I don't know the details because from my understanding, what I've heard was that you sort of technically could be seen as playing a real estate agent without being licensed. So there is some new laws and regulations coming down on that. I don't know what they are to sort of limit that. But I agree with you, man. I've never personally done that. I think the better thing is to find off-market deals. I have a good friend of mine, and I've actually done this myself, is drive around, look for houses, and like that house looks empty.
So you mean like a for sale by owner type thing?
Yeah, we'll find out people that bought these houses. Like, say you inherited a house and it's across town, and you're like, man, I just don't want to take care of it. Now you can go look up who owns it, through public records, and reach out to them. Hey, I see that you own this house. Doesn't look like anybody's living there. Would you be willing to sell it? There's a lot of different apps out there, and I can't remember the name of the one I was using now to save my life. But there's a house down the road from my house here that it looks abandoned. But I know for a fact I've never seen a car there in a year and a half. And my wife actually wrote a letter to the people that would own it and said, hey, we're interested in buying it. They're like, hey, we're actually not going to sell it right now. We have plans to renovate it ourselves. Cool. But a lot of houses that, are vacant or just sit there, people don't think like, okay, well, there's not a for sale sign. Let me find out who owns this house and let me reach out to them. And that's one of the things I think is actually more of an ethical thing, because sometimes people get houses and we've all seen them driving down the road. Houses just run down. And most times those houses were inherited or something, and then by somebody didn't want anything to do with it, and then they just let it run down. And instead of somebody reaching out and offering them. Now, there's ways to find those people, but it's find the off-market deals, I think, is the better way. If you really want to make a deal, is find an off-market house that maybe you need to put some TLC in, and then, they call it the BRRRR method. Buy, rent, rehab, and then refinance. Buy, rehab, rent, and then refinance. And those are buying off-market houses. Now, it's getting harder to buy off-market houses. Like, you can still go up to Detroit and buy a house for $2,000, $3,000. I mean, I don't know if you want to own a property in those areas, but, I know a lady, that's what she does. Every year she'll spend about $20,000 on buying houses at a tax auction in Detroit, and she'll go in there, have some people clean it up nice and neat, and then she'll sell them. That's what she does for a living. But it's just finding those deals. And I agree with you on the contract assignment. Like, I always thought it was a little unethical, but that's my personal opinion. But I think there is definitely some rules and regulations coming down on that where you can't. I don't know the details, so I'd be speaking only out of assumptions if I said. But I think it's a lot more restricted on how you have to do that, because there were people out there that were being manipulated and people being taken advantage of on those. So
yeah. So what about like mobile home parks? Because I hear that those are like I hear there's a lot of profit in those, but isn't it that you like if you have let's say you have an acre of land or whatever, isn't it like based on zoning, you can only put so many properties on that acre? So in other words, if it's like, I guess if maybe what is it? If it's zoned residential, is that like a certain number of properties on that acre? I guess what I'm asking is like a mobile home park. How would they? What would that be like a commercial plot of land? I don't understand, like how it would be laid out.
Well, that would depend on the county and the zoning in it. I mean, there are still places in this country that don't have zoning, so you could pretty much buy 5 acres and go put up a mobile home park, and nobody can say jack about it. But it's really, I mean, it just depends on what the zoning rules are for everybody. Like the zoning in Waxhaw is different. Rules are different than what you see in Indian land. It's just whatever the zoning are with them. But yeah, I've always heard that too. I mean, mobile home parks are cash cows. I mean, is what I've heard. I mean, to be unprofessional about the term, but I mean, straight up cash cows. But they are hard to get financing on, just because they're, anything mobile homes is hard to get financing on. I mean, there's some companies that specialize in that kind of stuff, but it's just a mobile home never appreciates, always depreciates. It's not like a house, and that's why they're hard to finance. Now, I think they're a great option for a lot of people. I think they're great homes. I have family that lived in them. I mean, I think they're great opportunities for people, and there should be better financing for them. But if they're not on a permanent foundation, I mean, you can just pretty much guess that it's going to be really hard to find good financing for that property. So
that makes sense. I guess what puzzles me is like somebody has like a duplex or a triplex or something like that on a property. To me, that's like more than one unit. So like, what's the difference in that and like having 2 mobile homes or 3 mobile homes, but
what's the classification of the mobile homes themselves? I mean, if it's for a mobile home park and there's zoning regulations, that community that you might be trying to put that in or that area around there, they might be like, I don't want that, over here. And that's why you have to see all these public hearing notices, versus like a 2-unit to 4-unit property. It might be already zoned for a 2 to 4 unit property. Also, and one thing else that, a lot of people don't know about this, a lot of people out there will buy land and then they'll go get them rezoned for like multifamily or 2 to 4 unit properties. Most people do it for multifamily homes, and then they'll call up developers like, hey, I've got this 10 acres. I just got it rezoned for, multifamily housing. Now the value has gone up because you've done all the legwork to get rezoned. That developer, all they have to do is now go in there and just do their due diligence and build. So a lot of people, that's a little unknown real estate investing trick that a lot of people don't know about with that.
Yeah, that's crazy. I've never heard of that. I didn't know you could do that. I didn't know you could have something rezoned like that.
Yeah, you just have to, depending on the county and the town, you just have to go and put a new zoning request in, and most of the time there's a hearing, for the people to come, public to come voice their concerns if there are any. So
yeah,
but yeah, people do that. I mean, that's one thing that probably most people don't know about when it comes to real estate investing is upzoning land. It's risky because you're buying that land to get it upzoned to something that's more valuable. But the dividends are there if you're good at it.
Man, it's crazy for us where we live at because we're right there, the North and South Carolina line. I mean, maybe you don't live there, but like we spend a lot of time in North and South Carolina, and the 2 states are so different. Like especially when it comes to real estate, man, it's it's completely different. Like I remember when I was getting my real estate license, you had to be licensed in one state or the other to work there, obviously, but it was like so different, man. Like the laws were different, what you could do. If I'm not mistaken, if you do work in South Carolina, like contractor work, if it's over $5,000, you have to be licensed as a general contractor. I think that's what it is. But in North Carolina, it's like 20 or 30 grand.
It's 30. It's 30 in North Carolina. I know that for a fact.
And that's like a $25,000 difference, man. I'm like, is it because of the values of the property? Like, I don't understand the difference. I don't get it. It's just like so crazy. Like I'll meet people who are not from here and I'll just have to explain to them it's like 2 different states, man. It's like, when it comes to laws and what's going on, it's completely different.
Yeah.
But especially in real estate, especially in something like real estate is way different. And that's like, you have people like who live right on the right below the state line, and then they're basically in Charlotte, but they're in a different state. You know what I mean?
Yeah.
Like it's a really weird thing. But listen, we've been talking about an hour. I don't want to take too much of your time up. Do you want to kind of promote your company and what you do? Kind of just say like what you do and who you're with and what you guys do.
Yeah, I mean, definitely. I appreciate that. I mean, I'm with Villa Home Loans. I'm a producing branch manager. I've been in the bit mortgage business for 15 years. The company I work for, we really focus on having a simple process, making sure that we always have a 5-star service to all of our customers. And all of our loan officers are experienced and trained before they ever talk to a customer. We probably have, with the added, just in our leadership alone, we have probably added combination of experience of over 70 years worth of, experience. And, different markets. We're nationally licensed. Our company is licensed in 48 states, even though we are just here in Charlotte. That helps us help family in California. I mean, everybody's so, mobile now. We can help your family in Pennsylvania, Ohio, Florida, Texas, whatever. And being a national lender opens up our doors, so we can actually help out. But we definitely will always make sure that we have coined a thing, so what we call sort of high tech with high touch. So we have technology that allows us to take the human body out of like stuff that like basic tasks that we use artificial intelligence in, that will like scan documents, run through gap analysis, do income analysis and stuff like that, which, used to have a human touch in there. And when you have a human going through 100 pages of documents, the variable is always higher that there's going to be something missed. So with our artificial intelligence that we use in our documents, this is just one of the things that we use. Actually speeds up time. So when the operations staff and the dedicated loan coordinator for that file reviews it, they're like, okay, well, this got tagged, this got tagged, this got tagged. Okay, great. Let me go through. Everything's been labeled correctly. Because when people upload documents, nobody labels anything. They don't label, oh, this is my driver's license. This is my, pay stub from December of 2021 or W-2 from 2022 for John, and then James, W-2. So 10X is literally like the time our team can put towards like really providing that customer experience. And that customer experience is really huge with us because there's always a story that's going to be told. Was there a good experience? Was there not a good experience? How do we make that person feel? And we always want to make sure that, that process is done good, because there is a lot of people out there like, dude, I worked with so-and-so. After they did my mortgage, I never was allowed to talk to them again. I had to call customer service line. Like, no. Yeah. I tell everybody, like, look, my phone's on me. The ringer goes off at 9, and don't call me during church hours on Sunday because my wife kills me. My phone rings during church because for some reason somebody always texts me, and I always forget to take off the ringer. So now she takes my phone from me. I'm available, whatever, we are very visible about, who we are, how to get in touch with us. All of our phone numbers are up on our webpage. Even my executive vice president's phone number's on there. We don't ever want to hide. And that's one of the things that's happening in this industry now is that a lot of people, like, you go to mortgage people's websites, you want to see the people that work there. You want to see like, hey, here's a number, call in. Like, we don't ever want that. We're very transparent about what we have. We understand that the customer is everything. Customer service is key. Making sure that we have customized, tailored solutions for every single customer is really, really important. And it's really, really, critical to our success, plus the customer success, because most of our business does come from referrals, and we've been very, very successful with that. And it's just a matter of just taking care of our customers and make sure they're in the great products. And if hey, we can't do this product, let me call John down the street because I know so-and-so at the credit union can do this. Let me call you and introduce him real quick. That's all about helping the customer for us. And that's the one thing we take great pride in, by all means. So, yeah, we've been good. We've been very successful. As you can see, I've been recognized nationally as a top 1% mortgage originator in the United States through Mortgage Executive Magazine. I've been in Scotsman's Guide. But that's not just, credentials with my skill, my talent. It's credentials with my team. Last year we had I had 3 people that had only been in the business for less than a year hit top 1% and in Scotsman's Guide. And that's incredible because there's people I know that's been doing this for 30 years and never been in either. We had 7 people in the top 1% originators, and then we had 6 people in the Scotsman's Guide for the last 2 years. And that's a great testament to like our teamwork and our support staff, our loan coordinators, and to our customers. Our customers, they love us. We take care of our customers. I've actually already gotten text message from customers today saying, hey, I hope you have a happy Thanksgiving, you and your family. I saw your girl was sick. I hope she's doing okay. It's a family to us, and that's how we treat everybody. So, yeah I mean, I appreciate letting me, have that little chat there. I mean, I believe in what I do. I mean, and that one of the things, that really, hits home with me is when that first time home buyer calls you, they're like, nobody talked to me, but you did. And they're crying on the phone with you, sitting there saying, thank you. Nobody would talk to me, so.
Yeah, it's like, I know my personal opinion, mortgages, law, like attorneys, that's somebody that because you have these big firms sometimes that when you call, it seems like there's 1,000 people and you never really get to who you want to get to. But when you get that personal connection, man, it's just like a whole different thing, Yeah. You mentioned something that I thought that reminded me of this. You're talking about telling people to text you if they have any issues or whatever. I saw an interview a while back where Jeff Bezos was asked what was his favorite midnight snack, and he said that he was asleep at midnight. They didn't ask. There was a clip of Elon Musk who was talking to his employees, and he said, I don't care if it's 3 a.m. on a Sunday morning. If you have a problem, call me because I'm there. Yeah. And, I think those two gentlemen are kind of, the differences are obvious, but that just kind of shows, a person who's there, a person like Elon Musk who slept on his couch at his factory, it makes a difference, man, when you're there and you're available. It's not only to your employees, but your customers, your clients. I mean, it really makes a difference, man. And it's hard to put a value on that. It's hard to say how important that actually is. But especially like with your team, man, like your team sees that, like when they see that you're there and you're ready to put the work in and that you're available, that makes a big difference. I think a lot of, I've worked at a lot of like big companies and unfortunately that quality just seems to kind of disappear. I think the bigger the company gets, everybody at the bottom, it's almost like it's a number.
I agree, man. But that's something I've learned from my boss, man. My boss, Eddie Brown, really I wouldn't say beat it into us, but he leads by an example with, I could call Eddie right now, like, hey, man, I got an issue. Unless, he just physically couldn't answer the phone, he's going to answer that phone, right. No matter what. Me and him have been on customer calls with customers at 9:30, 10 o'clock at night before, handling situations on the West Coast, or even later. I can't say I've done this, but he's actually been on the phone with customers, I know for a fact, at midnight because they were on the West Coast and they had to close it. He picked up the phone. That's just a testament to the whole organization and, leadership from the top down, mentorship and learning from people like that. So,
so if somebody wanted to contact you guys, like how would they get in touch with you? How would they, is there numbers or emails or websites or anything?
Well, our website is villahomeloans.com. But if they want to get in touch with us, they can reach out to me directly. It's chuck@villahomeloans.com. Or you can just simply call my cell phone. It's 828-508-9064. So leave me a voicemail if I don't answer. I return all my phone calls within 24 hours at the very latest. But yeah, we're always available for people in needs, especially going through the holiday weekends. Like we still have people, even though most of us are probably going to be traveling, we still are available. We have the luxury of being remote. So like if people need pre-approval on Friday of Thanksgiving before they go in there, we'll get a couple calls on Friday. My team will say, hey, we need updated pre-approvals. We're going to look at houses. And even if they're with family, they'll jump in there real quick, take care of it and send it out to that partner or that, client because they're going to look at that home this weekend. They need it. So we're definitely.
So you guys can do everything remotely. Somebody states away, you can just do everything for that person is like, just like they were there with you.
Yeah, definitely. I'm actually working from my home office today. And I have the same setup here that I do in my office. But yeah, we actually have a few remote loan officers too that work 100% remote. So yeah, we can do anything. And the biggest thing I like about being a national company is like my best friend lives in Florida. I just helped him do a mortgage a few months ago. I have another good friend. You probably saw the post, closed on his house last Friday. Down in it's not the Gulf Shores, but it's close to Gulf Shores, Alabama. It's that area. Yeah. I helped him close. So I'm able to help friends and family, and I've helped a lot of people. Like, hey, my mom lives in Ohio still. Will you just call and help her out? And I've been able to help them out because we're licensed there. So Being
Okay.
national helps, but we definitely like to be focused on our community and stuff like that too. But having a national presence really helps us out to be able to help out all of our clients all over the place.
All right. Well, sounds good, man. Is there anything that we didn't touch on that you kind of wanted to?
Oh no, man! I think we had a great conversation. I really appreciate you taking the time and inviting me on here, man. I really appreciate it, man. We're really grateful for the opportunity.
Yes, sir. I'm going to close this thing out. Stick around for a minute, but I'm going to go ahead and close it out.
All right.
But I do appreciate it, man.
All right. Thank you.
Yes, sir.